Hi there, welcome to Nepi Invest. The topic of today's video is a company called Genetic Signatures. Now, the market cap of this company is about $200 million. And when you look at the operational cash flow in the most recent quarter, 4.8 million, and then you look at the cash flow for the last 6 months, you might get really excited about this company. But if you have not been living in the cave, you would know that this company has benefited from COVID-19, and you'll be able to see those benefits during this video. So even though they were operational cash flow positive by $4.8 million in the one quarter, the market cap of this company is still $200 million, and the market is a little bit wary about this company moving forward, because when all this testing in regards to COVID-19 does die away, the question becomes, how will that affect Genetic Signatures moving forward? Now, in saying all that, I am a little bit excited about this company over the next 5 to 10 years. There's a lot of promise in regards to Genetic Signatures, and this promise was already priced into the share price of this company pre-COVID-19, and we'll have a look at that when we have a look at the chart. Anyway, this company is a molecular diagnostics company who have developed test kits for the detection of infectious diseases under the EasyScreen brand, which uses their 3-base technology. For instance, Enteric detects 20 gastroenteritis pathogens, including Salmonella and noroviruses, registered already in TGA and is in the process of being approved by the FDA. And Genetic Signatures have a lot in the pipeline right here. So a lot of promise moving forward for this company in regards to their testing kits. But because they do have a coronavirus testing kit, they have benefited over the past few years in regards to testing for coronavirus. So this company has seen a lot of cash flow come in because of that, and you'll be able to see that when we look at their cash receipts history. Genetic Signatures was formed in 2001 by Dr. Jeff Grigg, who before this point in time worked for the CSIRO. And anyone or anything that comes out of CSIRO, you have to look long and hard at those people or those things, because a CSIRO is an absolutely wonderful organization that I do think, and this is just my opinion, the federal government totally underappreciates what they do. The Genetic Signatures listed on the ASX March 2015, so they actually have been around as a listed company for quite a while. The current CEO is Dr. John Melky, and in fact, he's been with Genetic Signatures for almost 20 years. The main shareholder of the company is Asian Union Investments. They have a 26.2% holding in the company, and at a share price of $1.40, the market cap of Genetic Signatures is $200 million. And that really hasn't changed from pre-COVID levels. So at this point in time, all the hype in regards to the tailwinds behind COVID-19 and testing is out of the Genetic Signatures price, because if you compare price now to the price pre-COVID, it's almost identical. And the ticker code for Genetic Signatures is GSS. You can see the benefits of COVID-19 for Genetic Signatures when you compare their financial year 21 numbers to their financial year 19 numbers, which is or has no effect of COVID-19. For instance, revenue has grown or did grow from $5 million to $28.3 million. Gross margins were almost identical. The company became operational cash flow positive from negative $2.3 million to $1.8 million, and profitable from loss-making of $3.5 million to profitable of $4.2 million. They did a fairly big capital raising. I think it was a $37.5 million capital raising, which means their cash on hand right now is around $30 million, or was at the end of financial year 21. PE ratio, fairly high, 46.4, but that's on a low base, only profitable of $4.2 million, and price to sales ratio at 6.9. So some of those valuation metrics look a little bit stretched, but I think the market is pricing in the potential of this company over the next 5 to 10 years. Instead of comparing Genetic Signatures' most recent Pennies 4C to the one year ago, I'm going to go back 2 years ago, just to see how they have been affected by positively affected by COVID-19. Receipts to customers in this quarter, which was the last quarter before COVID-19, 1.3 million. And Genetic Signatures was operational cash flow positive in this particular quarter by 329,000. But that's because they received $2.1 million in government grants and tax incentives. In my opinion, and this is just my opinion, government grants and tax incentives don't belong in the operating activities section. It belongs in one of the other two sections, the financing or investing activities sections. Anyhow, they did a major capital raising during this quarter, receiving $37.5 million, which raised the cash on hand from $5 million to $35.6 million. So when you do look at the commentary in regards to this Appendix 4C, you'll notice there was no mention of COVID-19. And it was around this time, towards the end of January, when COVID-19 was becoming an issue in China. But at this point in time, no one was really understanding that this could become a worldwide issue. So this company had not been affected positively by COVID-19 at this point in time. And that's one of the reasons they did a major capital raising. Now let's have a look at the most recent Appendix 4C, which was a pretty good quarter result for Genetic Signatures. And you can just see how this company has benefited from COVID-19 when you compare the cash receipts from 2 years ago to the cash receipts now. $12.1 million of cash receipts. That's significant growth from what they experienced 2 years ago, which was just over $1 million. And they were operational cash flow positive in this particular quarter by $4.8 million. And because they didn't receive any government grants and tax incentives, that cash flow from operations is true cash flow from the company's operations. Not only that, if you look at the first 6 months of the financial year, receipts to customers $22.4 million and operational cash flow positive $7.9 million, which seems crazy when you compare that operational cash flow to the market cap of the company, which is only $200 million. But again, the market is not expecting these sort of cash flows from operations to continue in the future, because eventually COVID-19 will go away and these tailwinds behind this company will fade away with it. Now, the cash on hand hasn't fallen. It has grown because this company is operational cash flow positive. And in this particular quarter, it grew from 33 million to 37.5 million. So there is that potential, that possibility that the company didn't have to do that massive capital raising 2 years ago, but they did it. And that's the reason why they have a lot of cash on hand right now. Now, in regards to growth in receipts and some of their costs, this is comparing to 1 year ago, not 2 years ago. So receipts grew $3.1 million in the last year. Research and development grew by $400,000, and administration costs grew by $2.1 million, and staff costs grew by $400,000. Interestingly enough, product manufacturing and operating costs actually fell by $3.2 million. So there is potential they have a lot of inventory in stock, and that's why they didn't spend a lot of money on product manufacturing and operating costs. To really emphasize how Genetic Signatures benefit from COVID-19, all you need to do is look at the receipts history for this company from when they listed on the ASX in early 2015. And there was a 5-year period from the March quarter 2015 to the March quarter 2020 where receipts grew very slowly. And in fact, there was a 2-year period from the December quarter 2017 to the March quarter 2020 where receipts were going absolutely sideways. No growth in receipts at all during that 2-year period. And then all of a sudden, in the June quarter 2020, we saw a massive growth in receipts. In fact, receipts quadrupled from 1.2 million to 4.8 million, and then they more than doubled to the September quarter 2020 to 11.4 million. We saw a little bit of a dip in receipts over the next few quarters as testing slowed down a little bit, but then we saw testing grow again, increase again towards the end of 2021, and that's why we saw receipts grow from 4.6 million to 12.1 million, which was a record quarter for this company. And the question we have to ask ourselves, and this is the question the market is asking, is will this momentum keep going over the next few quarters, or will testing start to wane away, and that would have a negative impact on the receipts for this company? Now onto the weekly chart for Genetic Signatures. This goes all the way back to when they listed on the ASX in early 2015. And there wasn't much interest in this company from when they listed all the way through to the start of 2018. So a 3-year period where the share price really did nothing. In fact, there was a 2-year period where the share price just drifted lower and lower and reached a low of 25 cents in April 2018. But a little bit of hype in this company during the rest of 2018 and start of 2019. Share price increased from 25 cents to a high of $1.40. But for the majority of 2019, share price of this company went sideways. And then COVID-19 came around. And unlike many other companies which saw a significant decrease in their share price, Genetic Signature's share price did nothing. So the market was aware that this company could be benefited from COVID-19. And that awareness of this company being benefited from COVID-19 was fully realized in about April 2020. And we saw the share price increase from about $1.15 all the way to a high of $3, which was reached in about August of 2020. And then when the testing for COVID-19 fell away during the end of 2020 into the start of 2021, that coincided with the share price decreasing from $3 all the way back to $1.10. And then we started to see more people or COVID-19 starting to spread more and more throughout the country, more testing done in regards to COVID-19, and we have seen an uptrend develop in Genetic Signature's share price. There is a little bit of volatility there. Share price reached a high of about $1.87 a few months ago, around the time when we started to see COVID-19 spread, where we saw the borders open up, but the share price has pulled back lately and has reached the uptrend we have seen in the share price, and the current share price of the company is at $1.39, which is almost identical to what we saw the share price just pre-COVID. So there's no premium being put into Genetic Signature's share price right now because of COVID-19. That's all I have for this December quarter update to Genetic Signatures. They were operational cash flow positive by $4.8 million in this quarter, and for the half year just shy of $8 million. So this company is performing right now. The market is a little bit wary that these tailwinds won't last much longer, and that's why there's not much of a premium right now to Genetic Signature's share price and valuation. If you do want to leave any questions in regards to this company or any other company on the ASX, just leave in the comments section of this video, and I might be able to answer your questions in the future. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.